What is going on, investors? Hopefully guys are doing well out there. That's right. It's Friday. It's the weekend, and it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we had disastrous earnings from Tesla. We had good earnings and a price bump from Netflix. Next week, we will have earnings from everybody except for Apple and NVIDIA. And we had two of the most important stories cross this week as it relates to some of these companies, and I want to show it to you, but we better kick things off like we always do with Meta Platforms. So the week at 317, like pretty much everything, slide down about 2.7%, finish the week at 308.65. Now, Apple, Google, Meta, anybody else looking to make these VR devices, they've all of a sudden got FCC clearance that opened up 6 gigahertz bands that's going to allow you to wear these. They even say like in the car, but this is going to open up these kind of like low or very low power devices, a whole new class of device. It's going to allow for more use cases for these types of things. I think what we're going to do is have kind of a compression of this technology. You've obviously got the goggles that Meta has been making for a little while. You've got the Apple Vision Pro that's coming out. Those are kind of on one side of the spectrum. Then you have the Google glasses, which were like, early prototypes many years ago. You have Facebook releasing those kind of Ray-Ban ones. The minute this technology kind of merges in the middle and you have kind of maybe like a ski goggle type thing, I think you have a product here. Now, I don't necessarily think it's going to be like iPhone or mass market type thing, but I definitely think you probably have a viable product, and the FCC clearing away for those headsets to continue their development. Now, Meta, Google, seeing better ad spending as we head into the holiday season. Just anecdotally, I still run ads on websites that I own. It is absolutely picked up. Like it was like all of a sudden things started picking up. All the CPCs, which is cost per click, basically the amount of money I get per ad. I also do advertising. A lot of those rates have kind of jumped. And it is the holiday season, right? People kind of pick up advertising. So it's not a surprise. If it extends through January, February, March of next year, then you've got something. Now, Snapchat, I threw this in here because I don't exactly know how they're going to do this, but they laid out some goals for 20% advertising revenue growth next year. Now, maybe Snapchat's under monetized. It's not an app that I use. It could be that they're just under monetizing the app, and that's one way to do it. But I tell you what, if Snapchat is thinking they're kind of the overall piece that they've got is going to grow 20%, well, Meta and Google are probably maybe undervalued at today's time. Moving on to Apple, start of the week at 178, down about 2.8% to finish the week at 172.88. Meta reports their earnings just 5 days from now on 10/25. We've got a little longer to wait for Apple. They will report their earnings on November 2nd. Apple CEO Tim Cook got the welcome mat, the red carpet, if you will, in China as he met with that country's great premier or vice premier. Apple is looking to sell more ads on its podcast. Now, this is not the podcast that maybe you and I can upload, but these are the Apple-owned podcast, and they're going to sell some ads on that. Analysts believe that Apple is making about $4 billion per year on advertising. This, I believe, is across all platforms, including their App Store. Many analysts believe that they could push that into the double digits, and Bank of America said back in July that the company could generate nearly $20 billion in ad-related revenue by 2026. Now, the iPhone demand looks weak. That's according to UBS. We always get kind of mixed results as it relates to Apple. My guess is the Apple iPhone demand this year is roughly where it was last year, but you probably have some declining unit volumes just based on that's the way the smartphone market has trended. You just have less units being pushed out the door because there's people like me with a phone that they bought last year and they're perfectly happy with it. Apple MacBook shipments likely fell about 30% in 2023, but there was some important stories, and we got important earnings this week from Taiwan Semiconductor Manufacturer, basically saying very bullish, honestly, really bullish, not just on AI, but on kind of PC and a chip recovery in general. And these companies actually more or less kind of predicted their own demise. They predicted the slowdown in chips, and now they're kind of predicting the comeback, if you will. And so we could be seeing a trough in MacBook shipments and maybe a rebound heading into next year. Moving on to Amazon, started the week at 131, down over 4.5% to finish the week at 125.17. Amazon reports their earnings just 6 days from now on October 26th. An AWS conference kicking off next month, likely to have generative AI in the spotlight. Couple reasons for that. Number one, you put generative AI in a press release and, except on down days, tends to do well for your stock. The company invested $4 billion in AI startup Anthropic. Anthropic makes a Claude app, which is essentially like a ChatGPT. Amazon also has two different types of chips. So these are your computer chips, not potato chips, which I wish I had a bowl sitting here if I could. Amazon has two different computer chips, one for training, one for inference or running the AI. And obviously AWS wants to be a major player there. Now, this was big news for Amazon as they set to expand drone deliveries in Europe and the United States in 2024. Now, here in the US, not a big rollout yet. Just 2 more cities in the US by the end of 2024. You might ask yourself, where are they deliverable here in the United States? You've got College Station, Texas, which I think is home to maybe Texas A&M, and Lockford, California, which is actually not far from the Investor Channel studios that we're sitting in right now. In fact, I grew up not far from Lockford, and there used to be a golf course there that I used to play fairly regularly. This is big news because Amazon obviously could potentially lower cost as you get drone deliveries. Now, here's even bigger news for Amazon as they've actually been telegraphing this for a while, but the company actually gave more specifics as they're going to roll out more robotics in their warehouses to speed deliveries. And here's really important information, guys. Amazon said that this program, now they have created these robots, and Amazon has had robots in its facilities for a long time. They made an acquisition, I think more than maybe even 10 years ago, for robotics companies, and they get up underneath the product carts and they move them around. Well, in the past, what Amazon had to do is they had warehouse space, and some of the warehouse space was where the robots would go. And the other half of the warehouse space, or the other part of the warehouse space, would be where humans can go. They didn't actually intermingle them. It created some inefficiencies. It also created some backbreaking work for the human employees. Well, what Amazon is doing and what they've been able to do with AI and advancements in camera technology, some of the iRobot acquisition, which hasn't closed yet, but there's some patents there that from my research that Amazon wants to kind of put an ironclad around this business model, is they've created new robotics that they call Sequoia, and these can work side by side with other Amazon employees. It takes some of the pressure off the other Amazon employees. And here's a really, really key stat is Amazon said this program cuts the time to take to fulfill an order by 25%. Guys, even if that's way overestimating things, even if it's overestimating things by like a factor of 10 and it's just 2.5%, given how many products Amazon ships out every year, a 1% or a 2% efficiency gain has huge impacts on this company. The fact that they're saying this is 25%, if we're not sitting here a year from now and this company is spitting out net income from their e-commerce business, I might go down to the headquarters and slap Andy Jassy personally. Now, the other thing that they said is inventory can be determined and stored up to 75% faster. So they're going to intake inventory faster to the tune of maybe 75%. And they're going to be able to fulfill orders up to 25%. Again, I'd assume this is the high end. We'll shave quite a bit off of this. Even an Amazon robotics system that shaves off just a couple of percentage points off of time, huge deal. It's what we've been waiting for. This is what you've been waiting for. If you've been holding Amazon shares for a while, this is what you've been waiting for them to turn their business over to robots. Now, it doesn't mean we're going to replace employees. Doesn't mean the company's never going to have employees work there, but it's going to take away some of the backbreaking work, and it's going to leave the employees there that actually want to be there and are doing a great job. This is fantastic. Now, Other big story of the week, Microsoft said to sell $1 billion of Office 365 cloud tools to Amazon. The irony here is very, very thick. Number one, the two companies obviously compete on the cloud business, very, very competitive business. Number two, Jeff Bezos freaking hates PowerPoint. In fact, he specifically outlawed PowerPoint. And now his company is spending $1 billion on Office 365. Folks, this is a big, big flashing red light sign telling you that Office 365, they're not buying the old Office 365. They're buying the new Office 365 with AI and Copilot. If a company that competes very fiercely with Microsoft in a big business, and also the former CEO and founder of the company hates one of the company's products with a passion, the fact that they're cutting a deal with Microsoft is just telling you that Microsoft has a very, very special product. I've been saying it here almost every week, that Microsoft has a very, very special product coming out, and it is going to be huge for them. Speaking of huge, moving on to Netflix, start of the week at, look at that, 357, boom, bucking the trend, up over 12.3% to finish the week, darn near $401 per share. The company jumped 9% on earnings just a couple of days ago, as sub growth was fantastic for Netflix. On top of that, now they're hiking prices. It just looks like this company has a winning recipe, and that's not really breaking any news, but whatever Netflix is serving up to their customers and potential customers, they are liking it. Now the key is for Netflix, can they raise these prices, continue to see that growth? And that's what some investors are betting on. Netflix Cup golf event sets up a streamer's entry into actual live sports. This is really interesting. They're going to take a couple of the golfers from the PGA Tour and pair them up with a Formula One driver. They're going to go to that beautiful golf course that's behind the Wynn Golf or the Wynn Casino in Las Vegas. I think they've converted that from an 18-hole course down to a 9-hole course, and they're going to have kind of a match style thing. And golf's got some really exciting television that's coming up. You've got that Tiger Woods golf league that's coming out. That's going to be like indoor. It's going to be like simulations. Golf, I tell you what, it's a sneak. If you want like a sneaky play for next year, you've got like $10 in your Robinhood account. There's some publicly traded golf companies, and if these shows are real popular, you could see a surge in golf popularity. Moving on to NVIDIA, start of the week at 457, down 9.5% to finish the week at 413.87. Talk about a reverse of trend here in a moment with NVIDIA. They report their earnings late on November 21st. TSM stock rose this week, or at least on their Q4 outlook and their extension for some China exports. We'll talk about more of that here in a second. They've got a new plant in Germany. They've obviously got stuff going on out here in the United States. TSM was particularly bullish on their conference call, not just about AI. I mean, they've been bullish about AI since earlier this year, but they actually talked up kind of traditional PC shipments again, and I think that's pretty bullish for TSM. Now, back to NVIDIA. The company slumped a little bit on these new United States-China chip, I'll call them sanctions. NVIDIA saying that they don't have any meaningful impact in the near term, I think because most of their chips that they're selling have been pre-ordered, but longer term, you have some things here. Now, China has been skirting around the original sanctions that were put in place maybe about a year ago. They were buying essentially a clocked down version of one of NVIDIA's flagship chips, the A800, and they created an H800 chip. The United States essentially outlawing even those chips going into the country of China. So this is going to do a couple of things. Number one, it'll tamp down demand for NVIDIA, I think. I mean, I don't think necessarily dollar for dollar here in the United States it's going to show up in the long term. In the near term, I believe NVIDIA's sentence, but I think this is a very, very political way they said that. I think as we get into next year, you've probably got some meaningful impact of not being able to sell these chips into China. It's also more or less encouraging competition to come on board, not just competition that competes directly with NVIDIA, like an H100 copycat chip or something like that. No, what it's going to do is require Chinese companies to do more with, we'll put this in air quote, do more with less. And so it's going to have them experiment different ways to train language models and to implement AI without the highest performing chips. And overall, I think that's actually bad for NVIDIA. NVIDIA thrives on high performance and continuing to inch that performance up. If you can run AI on a less powerful chip, I don't think that's great for NVIDIA's long-term business model. AMD rose this week, just temporarily, as it unveiled fastest Radeon GPU and new Ryzen CPU. Some of this stuff going into your traditional computer chips and gaming PCs. You will be able to use this new Radeon GPU to do some artificial stuff, very similar to, I think it's the RTX 3090. Don't shoot me if I'm wrong about that one, but I still believe people are doing actual AI training on a graphics chip NVIDIA makes, really for gamers. Moving on to Google, start of the week at 138. I was literally on Google's campus today, and I tell you what, it looked like a $1.7 trillion company campus. You literally, I biked all around Google's campus today, and I think I saw like a third of it. It's ridiculously large. Company finished the week down about 2.2%, finished the week at 135. Thank you for the hospitality over at Google yesterday and this morning. The company laid off some employees in their news division. Job cuts of only about 40 to 45. Of course, if you're one of those 40 to 45, it's not that easy to take. My guess, folks, is AI probably had something to do with that. Now, Google to manufacture Pixel phones in India with a rollout next year. India obviously kind of absorbing some of the supply chain that is coming out of China, particularly on the mobile phones. And Apple, I think, is quoted of saying they want to get to about 50% of their phones production in the great country of India. Big story here. Google and Qualcomm team up to make a RISC-V chip for wearable tech. Now, Qualcomm has been an area, or should I say leader, as it relates to developing RISC-V chips. RISC-V is an alternative to not just the x86 processor in basically any Windows-based PC. You're going to be running likely some kind of Intel or AMD x86 processor inside of your mobile phones. So your Apple phone, like basically 100% of the mobile phones out there, those are all running on ARM, which is ARM. The company just went public earlier this year. RISC-V is an alternative to that, particularly as it relates, it can compete with both x86 and ARM, but it really, I think, kind of infiltrates ARM's business because it's kind of low power, simple instruction sets. On top of that, it is open source. Google announced, I think it was either earlier this year or last year, they're going to allow software support for RISC-V on Google Android. My assumption is that you're going to see an Android phone in the next 12 to 24 months that is going to actually be on RISC-V and not ARM. And just very interesting. RISC-V is perfect for these wearable solutions like your watches, maybe even smaller devices, certainly drones and things like that. RISC-V is going to be used quite a bit, and you're going to be able to not have to pay licensing fees to either Intel or ARM Holdings Company. Google search deal accounted for, look at this, 50% of all domestic searches. That's according to experts at a trial. And I should note, in 4 days, we'll get Google earnings on 10/24. Now, Microsoft started the week at 332, down just 1.75% to $326 per share. Just like Google, Microsoft will report their earnings on 10/24. Microsoft said to sell $1 billion. Talked about this during the Amazon presentation. So if you skip that, don't take my dull tone how big this deal is. There should be red lights flashing on the screen here, guys. Microsoft selling $1 billion of its Office 365 tool to an arch rival should tell you what is about to happen over the next 12 to 24 months for this software. They're getting $30 extra ahead. Not only that, they're able to go to competitors like Amazon and nail down a new deal. Jeff Bezos freaking hates PowerPoint, and now his company's employees are going to be using that software suite almost exclusively. Moving on to Tesla, start of the weekend. Is that right? Oh my goodness, 253. We hit the accelerator down 16% to finish the week at 212. Tesla, disappointed earnings, disappointed margins, disappointed with everything that the company's got going on. But they still hold the full year guidance on deliveries. That's the thing, though, on deliveries, because simply they continue to drop the price. Elon Musk didn't do himself any favors on the conference call. He really kind of dug in on the Cybertruck, really talking up how great of a product it is. I wouldn't deny that, but that the fact that the delivery numbers and the contribution to the company is going to be 18, maybe even 24 months out. You did get a delivery date at the end of November, I believe, for those Cybertrucks. I hope I get confirmation that I can show up and pick one up, but I doubt it. Toyota, among many, many other automakers at this point, worked out a deal with Tesla to adopt their charging standards. Other charging companies like Blink Charging, I think, is starting to roll this out pretty soon. Every EV made is going to be on the Tesla charging system. And ultimately, this will be a very, very good business. Might even be a great business for Tesla, as their charging stations certainly are the best. Moving on to the technical segment of the show. Hide your kids, hide your wife. Guys, that is not good. That is a big, decisive red daily candle on, wouldn't say sky high volume, but you've got increasing volume here. Your increasing volume, decisive red candle, break below trend, close below trend. I'm not ready, not quite ready to take this uptrend off of the screen, but we're basically getting there, folks. Now, what you do get a lot of the times when you break these uptrends, first of all, it depends on how you draw these lines in here, right? You can draw it in like this, you can draw it on like this, you can draw it down here. So the break below today could end up turning in an area of support, but what I will say is probably more importantly, you have some levels on the S&P 500 right here at 4160, probably like 4120 to 4160. You would not want to break these levels. These were support resistance for the longer time. If the buyers don't step in, basically where this purple line is, you are retesting areas considerably lower, probably south of 4,000 on the S&P 500. Obviously, as you move into next week with mega cap earnings, that could move the markets one way or another. Speaking of a company moving one way or another, and that is Meta. They report earnings just 5 days from now, although we'll get a read on Meta as you'll have some social media companies report before them. You'll have Google the day before on 10/24. So we'll see how Meta stock reacts when Google announces their earnings. But obviously we were in a breakneck trend. That trend has broken, but you're still in a high quality, higher lows, higher highs. A break below for Meta would take you south of this 290 mark. I don't think this is the worst area. If you believe in Meta, you like online advertising, this is your opportunity. A push higher, I actually think you can take profits. Moving on to Apple, the short-term trend is still intact. You're making a high, a lower high, and a lower high, and you are confirming it with lower lows. It looks like to me this one wants to maybe retest an area down here south of about 165, complicating the situation as it relates to pretty much all of these stocks outside of Netflix and Tesla and probably NVIDIA, as Apple reports their earnings on 11/2. Just me personally, there's some of these stocks that I like. If I could buy some of these stocks, I probably would, but I would wait until next week. Just wait until earnings. You're going to get a confirmation higher or a confirmation lower. I don't really see these things trading sideways because, as we'll see in a moment with Netflix or Tesla, they'll either go one way or the other, but they'll give you some confirmation, some more confidence, and I would wait for those moments. Moving on to Amazon, looks similar to Apple, making lower highs, pulling into a pretty solid area of consolidation with Amazon. It is wide. Company reports their earnings on 10/26. It is critical critical for Amazon to show that they're moving closer and closer to profitability on their e-commerce business. If they can continue to prove that, investors, I think, will give them a pass or a slide on AWS margins, which, based on all the conversations I've had with startups over the past couple of weeks, they're giving aggressive price breaks there. And so I'm not expecting huge profit margins as it relates to AWS. Now, great example here. Netflix breaking kind of a longer term trend. You keep the trend on because typically you come back here and do a back test. Looks like to me Netflix wants to do that. In the shorter term, that would take you back up to maybe about 440 on the stock, but it doesn't really prove anything. You've got probably some pretty heavy resistance as the stock moves up into the $400 range. A pull lower with Netflix, if you like the story, certainly could be bought, I guess. Now, here's kind of an ugly situation as well as it relates to NVIDIA. You definitely have like a kind of a head and shoulders pattern here, and it looks like to me it wants to break lower. A break lower will probably close this gap, take you down south of 350, maybe even south of 330. Those are your opportunities. When stocks are in these channels, so I have a red line at the top, red line at the bottom, and then I've got a black line dissecting it. What I do is like if I wanted to buy NVIDIA stock, I was super pumped up about it. I was just waiting for like a pullback. Looks like your pullback opportunity could materialize here very soon. When do you start buying on the pullback? Or again, make these decisions easy for yourself. It's easy to make emotional decisions in the stock market. That's why it's easy for most investors to lose money. But what I like to do is make the decision ahead of time. I would start accumulating my position about halfway down the channel. I wouldn't blame anyone to start when it closed the gap, but that momentum would be pretty sharp if it closes that gap. Probably wait until you get to about 300 on NVIDIA. Moving on to Google, still looks fine. This chart actually looks the best out of all of them on the breakneck trend. We're still on the breakneck trend of Google. You wouldn't want to see it break the level that it's currently at. We'll probably get indication one way or another with Google as they report their earnings on 10/24. But for now, the trend still looks like it's intact. Moving on to Microsoft, you made a high, a lower high, lower high. You're consolidating around the previous highs, which are towards the tail end of 2021 into 2022. A pull much, much lower. You're literally hoping, I don't care if you own Microsoft or you don't, you are literally hoping for a pullback below 300. A pullback below 300. Again, we had flashing red lights about this company on today's show as it relates to a news story. If you can't connect the dots between a company that's an arch rival that was basically forced to buy their new product, that should tell you how great Microsoft's upcoming product is. And it's not just an upcoming product. It's literally the biggest product in the company's history. It's the reason why the company is worth so much money. And they're literally upgrading it and making people pay $30 more. It's music to an investor's ear. You get a further pullback in Microsoft. If you have a pickup truck, you put it in reverse and you back it up. Moving on to Tesla. Going sideways, we have found support at the area that has been identified here on the chart at about 210. You would not, if you're a Tesla investor, you've got some wiggle room here, but you wouldn't want to see it probably break maybe like 190 or so, even 200 on the nose. Wouldn't really want to see a break there, but we said this a couple of days ago when the company had earnings. A south of like 175 is where I would target Tesla. You got to move into that area. Longer term with the full self-driving stuff, the Dojo supercomputer, the robot, the Cybertruck, eventually kind of reaching full production, and then maybe eventually like a $20,000 car. Got some opportunities to pick up a company at, $675 billion valuation minus out the cash and things like that. And it's not as wildly overvalued as it certainly once was. Folks, that's what it was here for Friday, October 20th on the FAANG Stock Recap Show. I hope you all have a very safe and fun weekend. I'll be back next Friday with a lot of earnings news, and certainly during the week when the companies report. I hope you all have a wonderful weekend, a safe one, and we'll see you again soon. Good luck with your investments.